Good day, entrepreneurs. My name is Precious, and today we're going to cover financial control and risk. Several times I get asked by entrepreneurs, Precious, can you give me the finance policies and procedures? My business is a mess. I really need to have a manual that's going to tell everyone what to do and how to do it. And that's the sad part about risk and controls. You cannot actually give someone some sort of a manual because it's going to depend on the nature of that business and how the owner manages the risk and how he resources his unit or his organization to make sure that this is managed. For today, therefore, I'm going to give you a framework that is going to help you to build controls in your business. But these controls are based on what? The risk. If you don't know what the risks are, you will also not know what controls to put in place. Because at the end of the day, risk is what could go wrong, and control is mitigating that risk when it materializes or before it materializes. So thank you so much for joining us, and let's go to it. And also just remember, read the modules again first before you attend or continue with watching this video first. Analyze what you are reading. Once you have done that, then watch the video. After watching the video, attend the question session where you will ask the questions so that you can start building and customizing your own area to make sure that you now are building up controls based on the risk you have identified. Okay, entrepreneurs, we're going to cover the financial controls, risk, and policies and procedures so that you can build sustainable business, but also manage a business by building systems. Because what you need to understand, as long as you're doing everything in your finances, you basically have created a job for you. The purpose of starting a business is to employ other people and get yourself fired so that you will then be a business owner. But you will not be a business owner if you are not setting up systems. So one of the ways you will build up system is understanding your business, build up the risk that what could go wrong, and from that, then build up controls. So the best way of doing that is to look at those 4 things that we worry about in finance. Whether those things are in a small business or big business, or even in government, we only worry about 4 things: income, expenditure, asset, and debt. So we will start using the board. So let's look at income. And we will also look at expenses. And we will also look at asset, and we will also look at debt. When we are talking about income, what do you think could go wrong within income? Maybe let's make an example. The price that you are offering to the customer could be incorrect. The quantity, which is your volume, that you are offering could be incorrect for that specific price. Those are the things that can go wrong in your business. Then what you need to work out is, what controls do I need to build to make sure those things don't go wrong? So first you have identified the risks, and then now you're going to work out the controls. The controls within your business will then be, maybe the first control you can build up is to make sure that I have an authorized price list so that my customers and my staff will always know what is the price for what I am actually offering. Control number 2 could be, when I am selling a volume, maybe that is less than 10, the price is this. When I'm selling a volume maybe above 10, greater than 10, to 20, the price is maybe this, or another one is price that. So it's volume based. So that could be the controls you are putting in place under income. So once you have set up the controls, remember the controls are there to prevent that risk materializing. However, you now have to implement policies that will govern how these activities or these risks is managed. And that is what we call policies and procedures. A policy will be, for example, our price increases happen once a year when we have done the inflation, right, rates. So CPI is what influences our price. You could also have another policy that when you have closed up the books, the procedures that you have in your business will be the accountant will then do what? Review and revise the prices. So accountant, so procedures always talks to that person. Whereas a policy talks to a general statement on what is our standpoint. And by the way, this arrangement you can include in your terms and conditions of your business, that the price will always be reviewed and revised when we revise the CPI or inflation rate, and that will be around this time. You'll specify that in your contract. What you need to remember when you put in the procedures, you're always going to indicate who will assist you to make sure that this is actually done. So that's an example on how you can do it maybe under income. There could be other risk, obviously, but you follow the same system. Identify the risk. How you're going to identify the risk? What could go wrong? And then once you have done that, you will then say what controls I can put in place. Remember, creating an authorized price list is what we mean in here. It can't just be a price list the sales agent has made up in their mind, but when they are providing maybe different bulk or sizes of quantity, it also have to be influenced by that price. You can have different prices based on the volume. And then also when you have pulled through that control, you need to ask yourself, what policy do we need to make that is because as you build a business, you must be transparent to your customer. You also must be transparent to your employees on how you're doing the pricing. And then what's the procedure that will actually apply. So that is just one example. We're going to do one for expenditure. Maybe I won't have enough space. Let me do this. I will do debt and assets separately. So then the next one will be an expenditure, right? Which is expenses. Again, on this one, we're going to ask the same question. What could go wrong under expenditure? So entrepreneurs, you will follow the same system. I've drawn a line here so that you can see that step one, you identify what could go wrong. Step two, what possible controls can I put in place? Make sure, entrepreneurs, when you're building a control, you're building a preventative control. And at a later stage, you should also build up a detection control, but you always start with a preventative control. And then you will then set up the governance on how that risk will be managed by creating a policy and a procedure, and you make sure that there's someone dedicated to make sure that that procedure and control is effected. So let's do another example on expenditure. The same question you will ask yourself, what could go wrong? For example, what could go wrong on expenditure? We could be paying more than we should, right? That is a risk. Another risk on expenditure or expenses is to buy things that you did not plan for. And entrepreneurs are guilty of this one. So you buy what is not planned for. Okay. Or you buy things you don't need, but there's the things maybe you want, which is a different. So it could be, but let's stick with the two for now. From that risk, these risks that you have identified, you then need to ask yourself, what controls can I put in place to make sure that this risk does not materialize, to make sure I prevent from that risk to materialize. So one of the controls that you can put in place will be, for example, that when you buy certain things, you will have a procurement policy that when an item is above a certain amount, you will get 3 quotes. That will prevent you paying more than you should, because you have done what? A 3 quotes. You kind of know what's the market price, what's the average price. Number 2, what controls, possible controls that you could actually have in your business when you are actually buying things that are not planned for. You could set up a budget for each line item on your expenditures. These are the controls that you can put in place. Now, let's talk about the policies and procedures that you can actually now look at. So the policy and procedure for this will be we will have a procurement now the accountant in me comes in. Procurement policies and procedure. How do we procure? So we'll have a policy on procurement that articulate different levels of acumen. So for example, you have a petty cash that says we will buy anything less than 3,000, we're gonna buy on petty cash. Anything above 5,000, for example, or $5,000, we will actually then get 3 quotation. Anything above 10,000 will get a director to sign off on it. So that is what your procurement policy. So once you have built that policy, you will then here you have the steps, which is now the procedures on how you're going to execute that policy. And the procedures are articulating, and this is what we also call delegation of authority, so that it allows employees to know what is within their scope and when do you get an approval and when do you actually go ahead and actually build up and execute. The next item or under this will be also a budget policy. So a budget policy maybe might say that we will do planning of activities and the budget will be done around a certain time. And if you have missed the time around that, it will need a director's authorization. So you need just to make sure that when you're setting up the policy, it sets up the time, especially when it relates to budget, because this is what we call a planning, financial planning. Financial planning. So buying things that we didn't plan for, we will not be able to do that, because we should always buy something that has a budget line item. And then the policy on that, we budget and do the work around a specific time. What could be the procedure there is that before you place an order with a supplier, the budget will be shared, the budget allocation will be shared, so that you know when you are getting a 3 quotes, how much budget has been set for that specific thing. So these are the policies and procedures that can actually be in your business. As I said, you first start with what could go wrong. And once you have done that, you then say, what controls can I put in place to prevent that risk to actually materialize? And I said, you're always going to focus on building controls that are preventing that thing to happen. As you build yourself, you will then have additional controls, which are detection control and supervisory control. An example of supervisory controls will be things, someone double checking or making sure that whatever price invoices that have been issued, they were within and authorized. So that maybe your accounting system can actually load this and not allow the person who's capturing to actually capture items that are not the price that is not on the system. So that could be maybe one of, you are automating now the controls. And then when it comes to even on here, maybe you can put the budget on your system so that it's accessible to your employees. And these policies, when they're in place, it's clear how they need to work on. But maybe a detection control and also supervisory control will be your accountant assisting you and doing a variance analysis, which is checking budget versus actual. And that will assist to see, are people within their budgets, and when they are not, are they getting appropriate authorization from you as a direct? And entrepreneurs, that is how you can build controls and systems and also policies and procedures in your business. I will make 2 more examples for debt and also for asset. It's the same principle again, entrepreneurs. You will use the same approach and the same system. And in other instances, the risk might come earlier than your controls. So there are instances that you will experience the risk happening and then you will put the control afterward. Remember, running a business is a learning and growing as the business actually changes. So under assets and debt, we will follow the same processes and systems to make sure that you do understand. This will be our 3rd example on this. And I hope also you will make comments on what will work for you, but also maybe give me what are your risks, share your risk so that I can help you to put through the controls and put through the policies and procedures. Then we will then be finished with those items. So as I said, we will look at our policies and procedures based on the risk. So you see why you can't actually have a manual of policies and procedures, because it's about the risk, because it's about the controls, and also it's about the cost versus the benefit of that risk materializing. So let me make an example. Earlier we had an example about the budget. If the cost of actually managing the budget is not justifiable in terms of the benefit, you shouldn't be doing it. So when you are putting controls, you must also cost the time it will take to build up that control and manage that control. Because if you don't take that into account, you might find that you have controls which you can't monitor. There's no point of having controls if you cannot monitor them. So let's do the one for assets and one for debt. What could go wrong on assets? Remember that example that I had made on the previous sessions when I was talking about financial strategies? What could go wrong could be underutilized asset. But the most common one is misuse of assets, where there is either theft or people using the assets of the business for their private use. Again, these are the risks we already know within small businesses. This is a big one. So what controls could you have to prevent this from happening? And what controls could you have to detect when that is happening? Because why are you now going to add immediately the detection controls is because the risk of this happening and the cost it will take to the business is too high. So the more the risk or the bigger the impact of the risk, the more controls. We will put both detection controls and preventative controls and supervisory controls, because we want to make sure that when this happens, we nip it on the bud, and we also make sure there's consequences. Now, on the preventative controls, when the asset is underutilized, is consistently making sure that the production schedule for each asset is maintained. What do I mean by production schedule? For each of your equipment, you must record the hours that equipment have been used for. You must also record the timing. That will give you an understanding in a month, in a year, how many days has that asset been used for. That is very important because you want to make an assessment. Should I own one or should I rent one? Should I actually maybe sublease it? Because the role of an asset is to produce income. Number two, when you're talking about a misuse of asset, when you're talking about the controls, possible thing that you could actually make sure that this you detect. The first thing is to make sure that the control that is in place, you put a heavy consequence management in terms of discipline. For example, when an employee has actually used an asset for their private use, and it has been proven, it might be something that you don't even give them the last warning, it's an immediate dismissal. So that is what a preventative control that you put it ahead when you are handing over the asset to the employee. But another control that you can put in place, maybe you can have a telematics. A telematics will tell you where the asset is if it's an asset that is immovable, like a car. It will tell you where the person was, and you need to check where the person was versus where the person should have been, which is your schedule, your trips, because the person, before they take the car, they will have actually indicated where they are going. But the moment they are outside of where they should have been at a specific time will be an indication to you that actually the person is misusing the asset, and that you will have a telematics. In general, telematics are quite cheap to keep, plus or minus 140 to 200 depending on the service provider, but also it's going to depend on the cost of that asset. You see, if I am actually driving a truck, a Mercedes-Benz truck, that is an average of 2 million to 3 million, depending on how big the truck is. Surely the 200,000 or 200 rand per month or whatever amount is irrespective, because it helps me to know and track my assets. Now, from that, you will then have other layer on this. Layer number two is to understand what are the policies and procedures do I now need to implement in my business. So one of the policies and procedures for asset will be acquisition. Acquisition policy maybe that states that before we buy the asset, we need to make sure that at least is 80% gonna be utilized, because the 20% we can afford to lose. Remember the 80-20 rule? There it applies. Maybe we could also have a policy on the misuse of asset, where we're saying we have a zero tolerance for misuse of asset. As a result, then linking to your HR policies and procedures on the discipline. And then procedure. A procedure now will say, if we pick up that, yes, there has been an underutilized, what will we do as a business? So once we pick up that the risk has actually, we will maybe have certain steps like we will rent the asset, we will sublease it, people will use it and come. We'll go and sell our SS product to our competitors. It could be a whole list, but the aim is that you will come up with strategies and plan on what that is procedure. Whereas when you are now talking about misuse, so one, maybe we have picked up that someone who will investigate. We'll get an independent investigator to actually investigate our telematics telling us the person was in a different place versus when the person should have been according to the schedule. I'm making that as an example. And from that, you can then get maybe the cell phone poll for that employee, which will confirm that that person was definitely there. We'll also confirm using the production schedule that, or a route schedule saying that entrepreneur or that business, that person who was using that asset actually should have been in a different place. And from that, you will then share that report with the employee as an allegations. And then there will be a normal process of HR, which will be basically having someone to chair to do this disciplinary hearing for this employee to be able to then be able to account for why they were in a specific place relative to where they should have been. Obviously, once the outcome has been determined by the chairperson of that, then the disciplinary will then be commissioned. So depending on the outcome of that, you want to make sure whatever processes you're following, they are within the Labor Relations Act, and also you want to make sure that the processes are transparent and also honest. You must also make sure that when you bring your employees on board, especially when you are dealing with maybe high expensive assets, you vet them right. You do a proper reference checks and stuff. So those are some of the controls that are behind this, that are in another process, but they do reduce this risk over a period of time, because you will have checked the background of the person, their environment, because there is a lot of things that happen that you can be able to pick up if you have put proper preventative controls, and also you have detection controls and use technology. Telematics will really be useful, especially for a movable asset. Now, let's move on to the debt. Remember, debt is what you owe to other people, and this is what you own. So, what could go wrong with the debt? I recently did a review financial statement of another business, and the risk that were in that business, for example, under debt, that not all debt were on the books. She had used her own personal financing to enter into some contracts. And we picked up that some of the debts were actually not on the financial statement. That is one of the things that could go wrong. But there is another risk here. You could actually have too much debt. What is wrong with too much debt? When you have assets that are less than a debt, you actually cannot afford to pay people that you owe, and to run a business that cannot afford to actually pay the people that they owe, it's illegal. It's a criminal offense because it's called mispresentation. So you have to make sure that there is risks that you identify that are at the organizational level, but also relating to a compliance. And then what controls could you put in place? Maybe, for example, on this one. The first one, not all debt are on the books. You could actually then maybe fix up your records management, because the root cause for this is the records keeping. Okay? Set up the systems that will make sure that all the statement and the records that you are keeping for debt is actually is reachable, and the accountants have been told on how to actually, that debt has arisen. Another controls that you can put in place is to, when you have too much debt, is to renegotiate the terms and conditions of the payment of the debt. And that is extending the timeline on when you need to pay the debt, so that it does not put pressure on your books to a point that you are unable to pay. That is what we'll call it, extending of your time, or you can cede also some, which is, we call it subordination of the loan account. Now, what policies and procedures can you put in place to effect these controls? Maybe policy 1 could be saying something like, we will not acquire debt without asset, i.e. any debt that we acquire has to be aligned to an asset, which then provide what? Security. Does that make sense? And number 2, we will also make sure that when we do application for a debt, this is checked and reviewed. So before you sign a contract, these are actually checked and reviewed. That could be your policy and procedures. Another policy that you could have in place to manage too much debt, you can say, our business have a ratio of 2:1 on our financial analysis to make sure that we always are leveraged. So this is what we call asset versus debt ratio analysis. That could be one of the policies that you put in place to make sure that you are not having too much debt, because too much debt could throw you off in terms of leveraging, in terms of being compliant with companies, that you could actually be taken as someone who's reckless because of the decisions that you are making. The organization, when it's over indebted, it means it will not be able to pay, which then leads to cash flow problems and also a going concern issue, a very high risk indeed in business. So entrepreneurs, that is how you will build policies and procedures, how you will start though straight from your risk, move to the controls, and after you've determined the controls, ask yourself, can I build controls that are preventative? Can I build controls that are detective? Can I bring controls that will actually help me to provide a supervisory controls? Remember, supervisory controls are reports. When you do not know what reports need to be produced in that specific process, ask yourself, what could go wrong? If that goes wrong, how would I know about it? Because that will then indicate to you what controls and how you will actually go about it. Just remember, as you build the controls in relation to the procedures and policies, make sure that the policies and procedures are very clear on when that thing needs to happen. So on policy, you are generic, but when you come to procedures, you're gonna state who needs to do, what needs to be done, when it needs to be done, and who needs to approve and sign off on that activity. Obviously, all those will also filter to your job descriptions, because at the end of the day, policies and procedures are there to help you to manage, but someone to manage themselves, and you having an ability to hold those individuals accountable. So please make sure that once you have done this process, the job descriptions are done, and also the checklist on each process is done, and you constantly review and see what could actually go wrong and what has gone wrong before. Take your lessons, update your register, and take your lessons on those things that have gone wrong so that you can actually have corrective action. Thank you so much. Please remember to put your comments and also make sure that you use the templates that we have provided for you to really be able to implement this and build. Remember, business is built from building systems and control, and this process will help you to get started.